Good morning. You're watching Market Cafe with me, Shreyansi Singh and Lisa Fernandez on ET Now. And over the next 1 hour, we'll take you through news and updates from within the country as well as across the globe. Tell you which stocks you should keep on your radar as well. Lisa, good morning.
Good morning, but it's not a good day for the US market because the Wall Street, it didn't look that, it didn't paint a pretty picture. And considering the red hot streak that was witnessed, seems like some profit booking was witnessed in the market because all the major indices, they fell after snapping a 9-day winning streak. Dow Jones, it fell more than 1% to 37,082. Nasdaq also was lower by around 2%. So both Dow Jones as well as Nasdaq, they ended a 9-day winning streak, logging in the worst day since October. Now talking about the S&P 500, that also declined more than around 1.5%, and it marked the worst day since September. Now, talking about the global earnings, FedEx was the biggest laggard in the S&P 500. It lost around 12%. So, but considering like if we leave out yesterday's, the three major indices, they remain on pace for a winning December as well as for 2023. Now talking about the economic data front, consumer confidence index, that climbed to 110.7 in December. And if I look at the stock futures now, they are trading almost flat, and I can see it's trading with a positive bias, and that is ahead of the economic data, the important data which will be slated for release. I'm talking about the US third quarter GDP, the core PCE price index, which is a favorite gauge of the Fed, and also the initial jobless claims, which are slated for release. Now, economists, they are expecting that the US economy will post a 5.2% year-on-year growth in third quarter. So that was on the US market. Shifting focus on the European market, it was a flip. The European market was a complete opposite of what we saw for the US market because they closed largely higher. The UK inflation came and it saw some slowing down, and it was more than what was expected in November to 3.9% down from that 4.6% which was witnessed in October. And talking about the index, which has to be highlighted, it was the FTSE 100, which jumped around 1%, and it hit a 3-month high. So that's largely the mixed picture coming in from US as well as the European market, while the US market is not, it's not showing a decent picture, but the European market is looking quite strong.
Absolutely, and when you're looking at oil prices, Lisa, it's actually quite a bit of a paradox because there's not a lot happening on an intraday basis that's there. But when you look at the macros, there's actually a lot happening. So oil prices were largely flat as traders weighed record US production against threats to shipping in the Red Sea from militants. Now, US crude rose 28 cents or about 0.3% to settle around that $74 a barrel mark, while Brent also gained 47 cents or about 0.5% or 5% rather to settle around that 79.7 a barrel mark. Now, oil prices were up more than 1% earlier as traders continued to worry about disruption to shipping in the Red Sea as Houthi militants attack vessels, but supply and demand concerns returned later in the day as US data showed that there was record US production and rising inventories as well. Now, when you look at crude inventories, they rose by 2.9 million barrels in the week to December 15th to about 443.7 million barrels compared with analysts' expectations in a Reuters poll for a 2.3 million barrel drop. Now, EIA also said that US crude output rose to a record 13.3 million barrels per day last week, up from the prior all-time high of 13.2 million barrels per day. Now, about 12% of world shipping traffic passes up the Red Sea and through the Suez Canal, so the Houthi mission targeting that area is of course important. Interestingly, when you look at supply though, the US bought 2.1 million barrels of crude for delivery in February according to government data yesterday. And when you look at S&P Global Commodity Insights, they've also said that looking ahead, the US is producing more oil than any other country in history, leading strong non-OPEC plus supply growth that will more than meet growing global demand in 2024. So let's see how all of that pans out for the oil markets.
And let's see what are the events that we have to keep a watch on, starting with the US. As I highlighted earlier, the Q3 GDP numbers will be out. The core PC price index as well as initial jobless claims also is slated for release. Moving on back home, on the corporate action front, we have the weekly expiry SPFC, All Cargo, Gati as well as KPI Green will be considering a fundraise. And on the IPO action front, also a lot of action happening in the in that market as well. In the primary market, we have the Inox India will be listing on the bourses today. And also it is the last day for subscription of Happy Forgings, RBZ Jewelers as well as Credo Brands, and Innova Captac IPO will be opening for subscription today. Well, on the other events that we have to keep a watch on, it's Nike that will be reporting their earnings, and on the Z-Sony merger, it's the long stop day today, as well as on the auto front, we have Tata Motors that will be unveiling its EV showrooms in Delhi NCR region. So that was all the events that we have to keep a watch on for today, Shreyansi.
At least 20,000 Palestinians have been killed in Israeli attacks since October 7th. According to diplomats, the United Nations Security Council vote on a draft resolution to halt the fighting has been delayed yet again. Meanwhile, Hamas's political chief is in Egypt for talks on the conflict. The visit comes after Israel proposed a pause in fighting in exchange for the release of about 40 hostages. Although an official said that they were not near a deal yet, Israel says it is close to defeating Hamas in its final strongholds in northern Gaza. According to the UN's World Food Programme, half of Gaza's population is starving and residents are often going days without eating under bombardment of the enclave of more than 2 million people.
So that was on the Israel-Hamas update, but shifting focus then on the global automaker Toyota arm, Daihatsu will be halting all their vehicle shipments, and this is on the back of a safety scandal investigation that was found issues involving as many as 64 models, including 24 sold under the Toyota brand. An independent panel investigated Daihatsu after it said in April that it had rigged side collision safety test carried out for 88,000 small cars.
And the latest commentary from the Federal Reserve, Philadelphia Fed President Patrick Harker said that the central bank should begin cutting rates, though not immediately, offering a softer pushback against widespread expectations of early 2024 cuts than some of his peers. He also added that job and inflation is not over yet, but things are moving in the right direction.
And reports are also suggesting that Citigroup is shutting down its distressed debt group. Now, the move is aimed at exiting the businesses with poor returns to bolster the bank's odds of hitting CEO Jane Fraser's performance targets.
Well, with this, we're timed out on this segment, but we'll see you with more news and updates on the other side. Welcome back. Thank you so much for staying tuned in. Well, let's take a look at the Asian markets then. Asia-Pacific markets largely fell after Wall Street dropped overnight, while investors are still awaiting gross domestic product reading and inflation numbers from the US. Now, economists polled by Reuters expect the US economy to post a 5.2% year-on-year growth in the third quarter, while the personal consumption expenditures price index is also expected to climb 2.3% in the same period. Now, when you look at the Asian markets, you're looking at Nikkei. You've also got the strongest decline coming in there. You've got Nikkei down about 1.4%. When you look at Hang Seng also, you've got a good tinge of red coming in for the Hang Seng as well, because the Hang Seng is down about 0.7%. When you look at Kospi, less defined moves, but still in the red, 0.7%. Shanghai also is in the red, but down just about 0.2%. ASX 200 not doing all that much, still down about 0.3%. But you do have a strong negative sort of move coming in when you're looking at all of the Asian markets. Now, when you look at the Nifty, it closed around that 21,150 mark. When you look at the implied, you're looking at a gap down open of about 39 points. Now, there was quite a plunge in the last few hours, even minutes of trading, and you did have all the sectoral indices close in the red, and just a handful of gainers in terms of stocks. So what kind of a move we have for Nifty would definitely remain important in terms of how it pans out for the Nifty.
Right, Shreyansi. But with that, let's move.
Welcome Back. Thank you so much for staying tuned in. Well, let's switch focus to PSUs then. Public sector stocks have had quite a run up this year. Somit is standing by with more details. Somit, what's next for the PSU stocks and how will do you see the run up sustaining going into a new year?
Well, PSUs have been the best sectoral performer in 2023. The gains that we have seen in the PSU index has been the highest since 2010, and if you see, the gains are highest in the last 14 years. And it was in 2009 when the UPA government was re-elected that we had seen a higher gain than 2023 at around 79%. But the gains that we have seen so far in the index is close to around 78%, which is the highest that we have seen in the last 14 years. Now, among the 56 companies that are the constituents of the BSE's PSU index, only one stock has declined in this calendar year, that is 2023, and that was Gujarat, which was down around 7% now. But removing that, all the other 55 stocks have managed to gain. And here are the list of some top performers in the BSE PSU index. Firstly, it's REC and PFC, which have gained more than 260%. Then there is IRFC, ITI and IRCON, which have managed to gain anywhere between 190 to 210%. Apart from that, there is RVNL, Mazgaon Dock, SJVN, NLC India and Cochin Shipyard, which have managed to gain anywhere between 145 to 172%. A lot of defense stocks have managed to give strong returns in this calendar year, that is 2023. Now, if you see, look at the market cap expansion of the PSUs. Now, the current market capitalization of the BSE PSU index stands at close to 49 lakh crore rupees, which is the total market capitalization of all the PSU stocks. Now, over 2021, which was at close to 15.7 lakh crore rupees, if you see, the market cap of PSUs have nearly tripled. Now, obviously, this has also happened because of the new listings that we have seen, especially the LIC listing that we had seen in 2021. But even if you remove that, the market cap expansion has been pretty much strong for all the PSU stocks. Now, some of the stocks that have added the most to their market capitalization, SBI tops the list. Around 3.35 lakh crore has been added to SBI's market capitalization since 2021 till now. Then it's NTPC, around 2 lakh crore of market capitalization addition. Hindustan Aeronautics has increased its market capitalization by nearly 1.6 lakh crore rupees. Then there is Coal India and ONGC, which have added nearly 1.3 to 1.4 lakh crore rupees in the market capitalization. Now, it was not only the profit growth that has led to this rise in the PSU. It was also the PE expansion, because if you see the valuations of PSU, they were very cheap in 2021, and that this expansion of the price to earnings or their valuations have also led to this re-rating when it comes to PSU stocks, especially for Cochin Shipyard. If you see, the valuations have expanded the most from 7.8 times back in 2021. Their valuations have now expanded to close to 56.8 times. So Bharat, the valuations have increased to around 81.2 from 11.9. For SJVN, valuations have increased to around 26.6 from 6.3. For RVNL, it has increased to 27.4 from 6.6. Then there are some banks also in this list, and NBFC like HUDCO and Indian Bank is the bank that we have seen. For Indian Bank, if you see, their price to book has increased from 0.2 to 1.1, and for HUDCO, their price to book has increased from 0.7 to 1.5. So profit expansion and also PE re-rating has led to this rise in the PSU stocks. But given the sharp run-up that we have seen in the PSU stocks, the index is the most overbought compared to other sector indices. The RSI of the Nifty PSE index stands at close to 91.6, which is the highest that we have seen since 2009. 34 out of the 56 stocks in the BSE PSU index have a RSI of more than 70, and generally whenever the RSI is more than 70, it is considered to be in the overbought zone. Now, there's a list of few that are the most overbought in the BSE PSU index. Firstly, it's Bharat Dynamics. The RSI stands at close to 88. IRFC also has an RSI of around 88. Then there is Hindustan Copper, IRCTC and SBI, which have an RSI of close to 84, followed by HUDCO, PNB and Hindustan Aeronautics, which have an RSI anywhere between 79 to 81. So we have seen a sharp run-up in the PSUs because of the strong profit expansion and cheap valuations. But do remember, the RSI is signaling that most of the PSUs are in the overbought zone.
That was quite an insightful data shared by you, Somit, on the PSU re-rating. What a sharp up move it saw this year. But let's divert attention to the December RBI bulletin, which projects a potential global economic slowdown in 2024, and also they foresee interest rate reductions amidst the global disinflation. Well, my colleague Ankur Mishra, he has more details on this. Over to you, Ankur. Take us through the RBI bulletin.
Yes, definitely. The RBI bulletin clearly states that in 2024, global economy may slow down. However, if you talk about India, that will continue to perform well as it has already done so with the corporate profitability numbers, with the data which is coming in. India has performed well in terms of global peers, and that is likely to happen in 2024 as well. However, on the inflation front, Reserve Bank of India's bulletin clearly mentions that in FY25, that is 2024 and 25, in first 3 quarters, 4.6% is likely to be achieved. Now, this is important because Reserve Bank of India is mandated to keep CPI between 2 to 6%, that is 4% plus minus 2%, and if it comes around 4%, that will be interesting to see that how MPC will take action post that. If you remember Monetary Policy Committee meeting, in that Reserve Bank of India governor had clearly stated that he needs to see CPI durably at 4% and it should not be one of the event. Now, all in all, economists will try to derive that when Reserve Bank of India will start cutting rates, because there was no hint, at least in the last policy from Reserve Bank of India governor on that front, and he continued that war from inflation is not over.
Well, thanks, Ankur, for that update. But stay with us for now, because sources tell ET Now that the Finance Ministry is also set to meet the public sector banks. Tell us a little more about that as well.
An important meeting is going to be held on Friday, that is between public sector banks and Finance Ministry officials, and the agenda we understand through sources is regarding the resolution of cases via insolvency and bankruptcy code, and also the progress of bad bank, that is NARCL. Now, what we understand that the Department of Financial Services is going to chair this meeting, and all leading public sector banks including State Bank of India and other PSBs are going to be part of this meeting. Now, why this meeting is important? Because NARCL, you would understand, has been little lackluster as per the expectation of government as well as banks, because only 2 to 3 cases have been resolved through NARCL. Remember, the first case which was resolved through NARCL has been the Shri Infra, and the acquisition is over. But overall, the kind of speed which was expected by the public sector banks has not been picked up till now. So all that discussion will happen, the review will happen by the Finance Ministry, and apart from that, the resolution from IBC is also going to be discussed. In the initial years, although there was a pickup by IBC resolution, because the cases like SR were resolved through IBC, but recently the admission of cases under IBC has been under question, where several months passes before it is being admitted in the NCLT, and many times banks resolve these cases outside NCLT. So all these discussions will be part of the agenda on the meeting which is going to be held on Friday, and Finance Ministry is going to take review on the same.
Thank you for that, Ankur. But let's shift focus on the telecom industry, which has welcomed the new telecom bill which has been tabled in the parliament on Monday. Now, as Lok Sabha passes the bill yesterday, my colleague Sumita Karish, she got more details on the same. Sumita?
A watershed moment for the telecom sector. Well, that's the word coming in from industry players on the recently introduced Telecom Bill 2023. Union IT and Telecom Minister Ashwini Vaishnav will be moving the bill today in Lok Sabha for discussion. Cellular Operators Association of India has hailed the bill progressive, one that focuses on the security of networks and is user-friendly. Airtel CEO and MD Gopal Vittal calls the bill, says that the bill will accelerate the rollout of telecom infrastructure in the country. Remember, India's rollout of 5G has been called as the fastest in the world. Vodafone CEO Akshay Mundra in a statement says that the bill carries benefits of digital connectivity for all, besides appreciating the punitive provisions mentioned in the bill. Meta as well says that the bill signals their support to continue to invest in digital economy. In fact, Indian Space Association representing Satcom brand says that the move will be a game changer for startup enterprises, one that will lead to democratization of spectrum. So the bill has comprehensive provisions for punitive measures for spam calls.
Well, that's quite an update coming in, Samita, but let's switch gears and quite literally then. India's auto component industry has registered 12.6% growth to reach around that 2.96 lakh crore in the first half of 2023 to 24. In fact, the components industry also expects the double-digit growth to continue in the second half of the year as well. ET Now's Sumit Chaturvedi caught up with ACMA President Shraddha Suri Marwa on the industry trends and more. Listen in.
So it's expected that the second half will also have double-digit growth. Usually in our sector, second half does well, sometimes better than the first half. So we don't see a challenge there at all.
And talking about the major headwinds and tailwinds for this sector, it's clearly grown a lot since last many decades. But what about 2024? What are the major possible supporters or maybe challenges for the industry?
So I think 2024 is a good year for us. We have a lot going in our favor. I think that input costs have actually stabilized. We are not seeing any challenges on the logistics front. Supply issues have been resolved in terms of semiconductors, etc. Government policy is extremely supportive. So we are not seeing, so that's all supporting the industry. In terms of challenges, I think while India is not yet impacted, but there are certain geopolitical issues which are happening in the rest of the globe. I think that's the only issue that we see right now. We don't really have any other major headwinds that we foresee.
Electric vehicles is a segment which has grown fast and going to grow further in future as well. What, according to you, and how much have you changed or ready or prepared for all this growth which is being seen in electric vehicles? Will there be major job shifts, if not losses, that will happen in auto component industry as well?
So I think the auto component sector is gearing up for all alternate fuels, including electric vehicles. There's work happening at all levels, whether it is on the people front or it is on the manufacturing front or the technology front. It is happening, and we are going to be ready for it. In terms of jobs, I think it's an issue of reskilling. So there is a lot of work happening on training and reskilling people, and to equip them to these new shifts that are happening in the mobility space.
That was the outlook on the auto component industry. But as we have observed, this has been a week of IPOs on the D Street. And according to news coming in from our sources, Ola Electric is looking to file for IPO soon. And interestingly, this will be the first EV company to file for the IPO. Srishti is joining us with more details on this. Srishti, talk to us about the Ola Electric. What are the key details of the same?
Well, as all eyes are on the Ola Electric IPO, and what we are gathering to hear from our sources is that the Ola Electric IPO could be filed just in the next few hours, and the top management and the bankers are in the final huddle for the IPO filing, wherein from the banker side, Kotak is the lead banker and Goldman Sachs as well as Citi are the other bankers for this particular IPO, and this is indeed going to be an interesting one. Why so? Because Ola Electric is going to be the first pure play EV company in the Indian markets to go ahead with the IPO filing. And other than that, in the past 20 years, if we see in the auto space, this is going to be a major auto OEM IPO that we have seen in the past 20 years as well. So this is indeed going to be a big one, and what market participants know till now in terms of the fundraising is that Ola has plans around of 5,800 crores to raise through this particular IPO, and they are looking at a valuation of $7 to $8 billion, which in rupee terms is 57,400 crores to 65,600 crores. So this is as per the understanding as of now. All eyes on the filing of Ola Electric.
Well, thanks, Srishti, for those details. Looks like it's raining IPOs in the primary market and it's raining exclusives when it comes to ET now. But moving away from it then, over next 2 to 3 months, government is likely to issue tenders worth 1.5 to 2 lakh crore. Now, Minister Nitin Gadkari says that the Road Transport Ministry has plans to issue tenders in small bundles before the Model Code of Conduct is imposed. Sameer Dikshit is standing by with more details. Sameer.
Continuing its focus on infrastructure expansion, Modi government is likely to come up with tender for the highway construction worth over rupees 1.5 lakh crore. This tendering process might be initiated in next 2 to 3 months. Government focuses that this tendering process should start before the model code of conduct comes into place. It is likely that the general election date announcement might be there by mid of March, and before that, government wants to at least initiate the tendering process for this 1.5 to 2 lakh crore of highway construction project, and the tendering process has to be started for the same. But we are also picking up from our sources, and even the Union Transport Minister Nitin Gadkari said that they want that there should be small bundle that could be up to rupees 1,000 crore, and that could be that could initiate the entire process very smoothly, for a simple reason that a project worth rupees 1,000 crore and above usually requires cabinet approval. And if we go by this route, a project having up to a quantum of rupees 1,000 crore, then this cabinet approval process might it will be skipped. So with this focus, government wants to initiate the tendering process, and they want to come up with the highway construction project that could be to the tune of rupees 1.5 to 2 lakh crore.
Thank you, Samir, for that update on highway tenders. But government is also planning to electrify the Delhi-Jaipur stretch, and the Road Transport Minister Nitin Gadkari, he says that Tata Power has actually shown interest in the project. Well, we have Samir Dixit who has more details on this. Samir, what are you gathering, and can you share some more key details on this electrification project?
In a move to push electric mobility in the country, the government is now focusing to have a first electric highway in the country that has already been identified. Delhi-Jaipur is going to be the first electric highway. And the interesting part is that government has started receiving the interest from multiple big names. The first name that government has disclosed is Tata's. Tata have shown keen interest for India's first electric highway, Delhi-Jaipur highway. But government wants to execute this Delhi-Jaipur electric highway on the BOT model, which is build, operate and transfer model. Nitin Gadkari, who leads the transport ministry, he has suggested that if we go with the BOT model, then 51% equity can be held by NHAI, the government entity, whereas 49% goes to the operator, who will be responsible for the operations, for the financial aspect as well. And this BOT model will also be helpful in getting a very subsidized rate in power procurement for the operator, which could be somewhere around rupees 3 to 4 per unit. So this is a very big development where government has received interest from Tata for India's first electric highway, Delhi-Jaipur highway.
Well, thanks, Samir, for all of those details. It was a sea of red yesterday, and we have Ansh joining in with the futures and options roundup. Ansh, how are you looking at it, especially since it was a big tinge of red yesterday?
Yes, let's start with that first. So Nifty gave a sharp down move in the previous session, engulfing 3 of its previous sessions. And this was the biggest single session decline in over 9 months. Volatility was so high that India VIX also touched its 8-month high. But such a move in Nifty is not something new if we see the historical patterns. Nifty has given similar moves around the same date in past 3 years. What's important is what happened after that. So Nifty, 2 out of 3 times, Nifty gave a sharp pullback of around 10% after falling for 2 to 3%. And yesterday, we saw a dip of only 1.4%. So a more dip should not be a surprise. Now let's see what happened in FNO segment. In Nifty futures, we saw long winding, whereas on option front, we are seeing very active call writing at 21,300, indicating traders expecting resistance around this level, while on downside, we saw active put buying at 21,000 strike, indicating traders expecting Nifty to touch this level. Also, the put to call ratio has dropped significantly from 1 to 0.45, which means calls are almost twice that of puts. So usually this is seen as an oversold or bullish sign, but many traders see this like too much longs and too much bullishness in a contrarian manner, that is in a bearish way. Let's shift our focus to what FIs did. In index futures, we saw a net addition of 20,000 contracts, due to which the total long positions has increased from 62.3% to 65.2%. Also, the total longs is at its 3-year high level right now. So in a nutshell, market may get more volatile today. One must wait for the market to stabilize. Some more correction can give opportunity to buy on dips. Also, it's a Nifty weekly option expiry, which usually ends with volatility.
So market is expected to get more volatile. That's the word coming in from Ansh. Thank you for that, Ansh, for taking us through the FNO snapshot. But with that, let's slip into a short break. More news on the other side of the break on the stock-specific action front. So stay tuned on the show.
Back. Thank you so much for staying tuned in. Let's shift gears and look at the management meet highlights for Venus Pipes then. The company is all geared up for faster growth in exports and aims to take it to 5,000 tons per year over the next 5 years. Gaurav is standing by with all of those details. Gaurav?
Right. So Nuvama met with the capital of Venus. Nuvama met with the management of Venus Pipes, and they have some highlights coming up. Now, management seems to be very bullish about the company's outlook going on. They believe that they are going to increase their export because they have got some product approvals from European Union, and they also have some strong team coming up for the exports. They also believe that they are going to use the same strategy, success strategy that they used in the European Union in other regions as well, like US and the Gulf regions. With this, they are expecting the exports to remain in the range of 5,000 tons per year, at least for the next 5 years. Let's also talk about the capacity addition. Now, the company recently added capacity of 38,400 tons in its portfolio in FY25. But beyond this capacity addition, they are expecting the capacity to increase almost with a CAGR of 15% over the foreseeable future. They also believe that the current capacity utilization will increase because there is some push coming up from the government to use the BI certified products, and there is also anti-dumping duties which are happening in the imports, which is going to push the capacity utilization higher. Let's also talk about the profitability. Now, Nuvama believes that with all these push coming up from the management, the profitability could increase with a CAGR of 54% over the next 3 years, and that is why now they have revised the target price and revised it upwards to 1,758 rupees, which gives us healthy upside of around 30% from the current levels. Let's also not forget that despite being a capex heavy company, company's debt to equity ratio is somewhere around 0.2 times, and the free cash flow is also strong for the company despite the capex that they have taken. So Nuvama all in all believes that this recent stock fall that we have seen in the company is actually an opportunity to buy for investors. So it will be really interesting to see how investors react to this positive commentary coming up from the management.
Yes, so Gaurav, it will be interesting to see the reaction coming in for Venus Pipes, but it's boring management meets because Motilal Oswal Financial Services also conducted their management meet, and we have Ashish Shah to take us through all the key takeaways. Ashish Shah, what are they saying on the outlook going forward for the company?
Well, yes, Elara Securities in fact met with the management of Motilal Oswal, and on the back of that they've come out with this report. First up, they've spoken about operating profit after tax, which is expected to grow at a CAGR of about 15 to 20%. As far as their dividend payout is concerned, it is expected to be in the range of 25 to 30%, and they continue to maintain their IRR target of about 17.5%. As far as their target market is concerned, they say that they continue to target customers with higher household savings, and they are also building a strong wealth management team which will help in growing their business verticals. As far as their affordable housing segment is concerned, they say that they are targeting a growth of about 20 to 25% in the affordable housing segment. They are looking to list their affordable housing segment after the demerger, and they are also open to any other opportunities as and when it comes up. So positive commentary that has come in from the management of Motilal Oswal, and the stock in focus on the back of this.
Absolutely. Thanks, Ashesha, for those details. After the successful launch of Arbor 1 in March, DLF is also all set to launch Arbor 2 or Privana South today. So that stock will be in focus. Sharad is here to tell us a little more about this launch. Sharad?
Well, in focus is DLF, and it's expected that they will be launching its first 500 units for the Arbor 2 project in the Gurugram region in Sector 77. Now, last time, the first phase when it was launched, there was a strong stock rally in the month of March itself, and this project itself is spanning over 28 acres, and the revenue potential comes to roughly 9,000 odd crore rupees. Now, Morgan Stanley is believing that a successful launch of this Arbor 2 project would actually drive the stock performance, and also the company is currently collecting the checks of roughly 50 lakh rupees to generate more interest. Now, around 500 units will be launched today, and assuming a 50% pre-sales coming in December, it could contribute to roughly 4,500 crore rupees in the Q3 pre-sales. Now, this would actually bump up the 9-month sales numbers coming up to roughly 8,800 crore rupees, which indicates a 33% year-on-year growth. Overall, the company is having a launch pipeline of roughly 11.2 million square feet.
Well, thanks, Sharad. So that's about DLF then. But let's take a look at some of the other stocks that will also remain in focus. So you've got Flair Writing Industries. When you look at the revenue, there's been an uptick. When you look at the EBITDA as well as the profit after tax, you're also seeing an uptick. So when you look at the revenue, you're seeing an uptick of about 4.2% quarter on quarter. When you're looking at the EBITDA, you're also seeing an uptick of about 3.1%. And when you look at the profit after tax as well, you're seeing an uptick of about 3.4%. Now, when you look at their EBITDA margins also, you've seen a little bit of a downtick coming in. So the EBITDA margins have declined about 23 basis points on a quarterly basis. So that counter will definitely be remaining in focus. But when you look at Mazagon Dock, that one will also remain in focus on account of that Defence Ministry contract that they've got. They've signed a contract of about 1,615 crores with for the procurement of as well as construction and delivery of 6 next generation offshore patrol vessels for the Indian Coast Guard. So that counter would definitely be remaining in focus. You also have Cochin Shipyard. Now they've signed a contract with the Ministry of Defence as well, and that was day before yesterday for a value of about 488 crores. And now when you look at the work, the package includes repair and maintenance of the equipment and systems on board the naval vessels. Now, they're expected to be completing this particular project by the first quarter of financial year 25. Now, you've also got Sonata Software that will remain in focus. They've signed a strategic partnership with a mega group. So, Sonata Software will be remaining in focus, and so will Ultratech Cement, because the company has also entered into a share subscription and shareholders agreement to acquire 26% equity shares of CleanMax Terra Private Limited. So that counter will remain in focus, and so will All Cargo Logistics, as well as Z Entertainment. Now, Z Entertainment is in receipt of a communication from Sony that they will enter into good faith negotiations, so that counter will also be remaining in focus.
Yes, so keep an eye on all these counters, but that was all the time we had on this edition of Market Cafe. Thank you for watching, but stay tuned as we take all the action on the market. For now, it's a goodbye from me as well as Shreyansi.